Hi, today our guest on Founders Talk is Andrea Azzolari, Principal at Plug and Play MENA.
We're one of the most active investors in the world, doing over 250 investments per year across the globe.
MENA region is so big. It's a very, very, very interesting ecosystem. As a VC, like if you join the VC world, I think one of the most important things is building the network. I was a skier, Alpine skier, and then I joined the dark side of the startup world.
Plug and Play is an accelerator.
By default, a venture capital firm. Since mid of 2006, 2007, we also started tackling the innovation challenges of corporates and governments. And no, now it's not a no forever. We work with 25, 26 plus verticals nowadays. So from agtech, pet tech, fintech, prop tech, new materials. I mean, basically you name it, we have a team around the world that is focused only on the specific vertical. Founders try to get shortcuts, give me money or don't give me money. VCs, we're not ATM machines. If you're building in fintech and you've never worked in payment, you've never worked in crypto, you've never worked in banking or any or finance related jobs, I'm wondering, why are you even building in fintech, right? Private sector approaches us and says, hey, Plug and Play.
Is Plug and Play doubling down on AI?
100%.
How do you measure the market size?
So I think in terms of the market size, founders and investors should really have an open conversation.
What is your criteria of selection?
We usually have a very tailor-made approach. When a founder is pitching without giving me an overview of the product, I'm like, yeah, fine, but what are you trying to sell me, right?
How can they approach you?
Baseline for the founders is...
I welcome you, Andrea.
Thank you very much.
Would love to hear about your journey, your background, and your entry in the MENA region.
100%. I think I have a very particular story because I was originally I'm from Italy, right? And I was a professional athlete there. I was a skier, Alpine skier. So if my life would have gone the same direction, maybe I would have been one of the guys in the Olympics over the past couple of weeks. But life took a different turn. And so I was an athlete in Italy. I finished my bachelor. And then I had sort of like a midlife crisis. I didn't know what to do, where to do it. And so I was just hearing feedback from friends, just brainstorming with family friends as well. And one of my friends was like, why don't you come to Dubai, figure out if you like it or not. So I came to Dubai, loved it, find a master degree over here. Randomly, like literally in 3 months, I packed everything that I had in Italy and I came here alone. And that was 2017, 2018. And since then, I'm basically based full-time here, most of the time in Dubai. Now, past 3 years since I joined Plug and Play, a lot of time in Saudi for obvious reasons, right? A lot of happening in the ecosystem over there. And so I studied here, grew up as an adult, as I always say here. Did a little bit of banking, did a little bit of consulting, and then I joined the dark side of the startup world and VC. So,
what did bring you to startups ecosystem?
A good question. Mostly, so when I was transitioning in between, different roles, after consulting, I loved it. Which is not the usual comment you would hear from people leaving consulting, but I really enjoyed it. But I was looking for something that was a little bit more, output driven and impact driven. Always, I would say, with a finance angle. And so I thought, okay, speaking again with a couple of friends that were in the industry, they gave me a pretty neat picture about what's venture capital, how does it work, the kind of impact you can generate with the company, especially in the portfolio management side of things. And so I loved it. Super flexible environment. It's relatively chill, not the consulting rigor. And so I was giving it a go, and I was lucky enough to join Plug and Play. And now it's been almost 3 years and a half that I'm with them, and very exciting times.
Interesting. So, what is one interesting fact which inspires you all the time about MENA region?
Generally speaking, the most interesting thing for me is that I always put myself as I'm very ignorant about everything that a founder is trying to pitch me. So that's, I would say, the best part of my job is that I always put myself as such, so that founders can pitch to me, I can learn, I can take it as really. Every conversation I have with a founder, it's a new learning journey, even though I'm being pitched the same, kind of solution 10 different times in a day, but I'm always trying to force myself to find different angles and look at things in as a sort of like a blank page. MENA region wise, I think the peculiarities of the ecosystem here and how the different pieces of the puzzle are working together, I think is the most interesting thing. The complexity of the ecosystem, the struggle of a founder moving from Saudi to the UAE or vice versa, regulation, how everything is evolving, the inflow of capital from abroad. Like, it's really, really, really interesting.
MENA runs on relationships. Is your deal flow merit-based or network-based?
50-50 maybe.
Okay.
So again, as plug and play, we get a lot of deal flow like by default in terms of the kind of activity that we run. Like a lot of accelerators give us, like an incredible pipeline of deals across different verticals, across different regions in the overall, MENA landscape. So that's, I would say, I wouldn't call it nor merit or not network. That's by default related to a certain extent the activities that we run and also to the brand. But if you want to look for maybe like a more pedigreed founder and so on, then it's purely relationship based. Like as a VC, like if you join the VC world, I think one of the most important things is building the network. And the network goes both ways in terms of founders. Like founders need to know you, they need to understand the value that you can bring to them, they need to recommend you to other founders. That's, I would say, number one most important thing. And then you also need to build a network of investors as well. Sharing deal flow, sharing pipeline, it's again one of the most important things of the job. So I would say 50-50. But again, we as Plug and Play, maybe we have a bit of a privileged position in terms of at least the volume of pipeline that, again, by default in terms of the activity that we run, we usually get on a monthly, quarterly, or yearly basis.
So is Plug and Play doubling down on AI
Yeah.
in the current time?
Yeah, absolutely. I mean, doubling down. I mean, we can tackle it from Plug and Play side in 3 different ways, right? Plug and Play internally as a corporation, we're trying to apply AI to basically everything that we do. Preparing proposals, sourcing, managing internal processes. We're trying to experiment, and also us as employees, we are incentivized by our management to propose new projects based on AI that could, support the entire organization to do or, to tackle a specific internal workflow. So that's the company side of things, 100% doubling down on AI. In terms of the business, so, working with governmental entities or private sector institutions on AI-related engagement, 100%. I think, for the past, 3, 4, maybe even 5 years, maybe 5 years is a bit of a stretch, but at least 3, 4 years, AI has become like a recurring topic in conversation. So everything that we do for the partners now, I would say, has an AI component or is AI driven, from surface layer tech to more infrastructure plays. That's, the kind of vibe that we're getting from the partners that we work with. And also in terms of investment nowadays, basically AI, it's pretty much everywhere. It has become an embedded part of each solution. So investing in AI nowadays, it's almost implied, because AI is everywhere, right? It just depends what kind of AI, how is the AI integrated? Is it a AI native solution? Is it a AI supported solution? So those are the kind of, conversation that we can have with founders, and that's what we need to figure out, especially at the very early stage. But yeah, AI pretty much it's the center of every conversation that we're having nowadays.
What type of verticals are you focused on?
So Plug and Play as a whole, we are, sector agnostic. So if we look at the business side of Plug and Play, so not the venture capital arm, the business side, we work, I think, with 25, 26 plus verticals nowadays. So from agtech, pet tech, fintech, prop tech, new materials. I mean, basically, you name it, we have a team around the world that is focused only on the specific vertical, right? And that's how we serve also the partners that are in that, operating in that vertical. In terms of investment as well, we are, sector agnostic, so we like to look at everything. In the MENA region, of course, we know where capital is being allocated. We see, if you look at one of the recent reports from the friends at Magnet, they basically create, they provide a very clear picture of where capital is being allocated. And of course, it's fintech, it's proptech, it's e-commerce, it's logistics. So we need to a certain extent to follow, where money is going as well. But how we invest, it's a bit different. We add, to a certain extent, an additional layer of complexity to our investment decision, because we take feedback from our corporate partners on every technology that we invest in, and so that also gives us, like a better angle. But if I look at my latest deals, some of them we have announced, some of them we have not, so I cannot name them. But we've done fintech, infrastructure play. We've done a biotech deal. It's very interesting in Saudi. We have been doing what else? A prop tech, a compliance play as well. So I think that Of course, fintech, it's one of the main categories. I think there are a lot of fintech solutions, yes. A lot has been already solved. A lot of problems in the fintech, let's say, value chain have been already tackled, addressed, and solved. But I think still, sub-verticals or specific niches can, still guarantee good opportunities. So it's always worth to look at. And then again, MENA region is so big. Prop tech, construction tech is very interesting space. We're seeing the surge as well, which for me it's super fascinating, or like a slight surge in industrial related solutions, so robotics. So it's again, overall, I think the MENA region now, it's a very interesting market. Leaving aside the geopolitical stuff around us, let's move that out of the picture. But purely from a tech perspective and tech development perspective, tech adoption, and interest from private sector and public sector in dealing with tech, I think it's a very, very, very interesting ecosystem.
Have you seen improvement in the quality of the deal flow which you're receiving since last 1 or 2 years?
I mean, that's always dependent on the sources of your deal flow, right? You can be very plugged in the ecosystem. Everyone loves you. VCs love you. They give you good deals. The founders love you. They recommend you to good founders. So it's always depends a little. Like, I think that's a little bit dependent on a couple of factors. I think what we're seeing is that the quality of founders, of course, it's improving. The quality of the tech built by founders as well is improving. The kind of problems they're solving, it's a lot of founders are taking a more regional focus, yes, but more global approach as well. So I think overall, we're heading into the right direction of where the ecosystem should be, in my opinion, should be going, which is building for the region, extremely relevant tech, extremely relevant teams, but with a sort of like a global landscape in mind for future rounds, future stages of maturity.
And you're running Accelerator program. Plug and Play is an accelerator. So mostly you are receiving application like cohort 1, 2, 3, 4, like in the form of cohorts. People are applying for that, and then you are selecting them.
Correct.
What is your criteria of selection?
Partially correct. So Plug and Play is not only an accelerator provider. So we are by default a venture capital firm. So that's how we were born. Back in the days, our CEO and founder started investing in some of the largest companies like PayPal, Dropbox, and whatsoever. Then we institutionalized the way that we have been investing. And since I think mid of 2006 to 2007, we also started tackling the innovation challenges of corporates and governments. So that's where the accelerator part, that kind of service component, comes in, because we usually work with corporate partners, private sector or public sector, to serve them this kind of services. And so our sourcing methodology or our criteria for looking at companies, it really varies depending also on the needs of our partners. So for example, if I'm working with, and I'm just making up examples, I'm not going to mention any existing client, but if I'm working with, I don't know, Ministry of Sports, for example, the way I look for solutions in order to fulfill the needs of the Ministry of Sports is going to be completely different compared to how I look at solutions for a bank that maybe wants to penetrate a specific vertical or is looking for a solution in a specific market at a specific maturity and whatsoever. So as accelerator provider, as service provider, we tend not to sell a solution that is the same for every partner that we work with. Otherwise, I think we would be running a very bad business. We usually have a very tailor-made approach in terms of the program design, in terms of the deliverables, the output that we are trying to guarantee, and the way we approach the engagement. So the channels that we source from are always the same. Internal network, we have a proprietary database where we have a large number of startups. Of course, we leverage inbound, call for applications, network of VCs, angels, whatsoever. So the way we get application, I think it's pretty much standardized across every exercise that we do. But how we look at applications to verify whether it's a fit or whether it could be, a company could be extracting value from the exercise that we are running, that goes on a case-by-case basis, depending again on what the client wants, what we can guarantee, what the company can do, the maturity of the founders, the maturity stage of the company, the kind of ecosystem of different players that we have around the specific initiatives. So we take all those considerations, cloud them into one big criteria or set of criterias, and then we try to apply to the companies that apply to the program to see, okay, worth putting them forward, worth moving them out, or maybe it's not good now, it can be good later on. So it's a combination of things, which it's a bit different, of course, from how we would potentially evaluate a company purely as a plug-and-play investment, right?
So you have a mandate, and technically you're matching needs with the solutions.
Correct.
This is
To a
what you're
certain
doing.
extent, yeah.
Do you have a mandate by the government, or are you working closely with the governments as well, and with the different ministries and departments, and you're analyzing the gaps, and then you're trying to fill it out? Is that correct?
So that's usually what we do with the private sector, because private sector approaches us and says, hey, plug and play. I don't know, for example, I'm taking the example of a bank. Bank can come to plug and play and say, hey, plug and play, having gaps, or I would love to explore solutions in area 1 to 3. And then we source the market locally, regionally, Series A plus, seed, pre-seed, depends what kind of risk appetite does the bank have for that specific challenge or use case, depending how we want to call it. And then we feed those solutions that we think are going to be a better fit into the bank for POC management, getting contracts, or whatever the engagement is. For government, depending again by the nature of the government entity, usually, for example, if I take Saudi, most of the governmental entities, they have a mandate of nurturing the entrepreneurial ecosystem within their own domain. So, for example, again, I'm just taking Ministry of Sports, completely random example. It's not currently a client of Plug and Play. They might have the mandate of improving, increasing the entrepreneurship adoption within the sports tech vertical. And hence we try to, whether it's incubation programs, accelerator programs, whatsoever, to fulfill that ultimate goal, right? So every organization has its own goal, private sector, public sector, whatever it is. They come to us with, we want this kind of service. This is the ultimate output that we're looking at. And hence we design, the entire exercise around that specific output.
So founders and startups can approach you other than the accelerator program.
Correct. And that's something that, if I'm allowed to interrupt, founders always get wrong. They think they don't really understand what plug and play is as a whole, and they usually limit their approach, to me or to us, generally speaking, for one specific initiative. Like, Andrea, I'm a principal at Plug and Play, so my main job is investing into startups. They all approach me as, give me money or don't give me money, right? Which I'm not a huge fan of that approach, but, it is what it is. To maybe other colleagues, they're like, I want to join a program or no program. So sometimes, they miss the broader picture of getting in contact with the Plug and Play ecosystem as a whole, because again, maybe it's something that I cannot look at, but my colleague in the US can, my colleague in Japan can, or we're currently running a deal flow for one of our corporate partners globally, and that specific solution can be included in the deal flow exercise. So I think, founders, when approaching to Plug and Play, they should have a more open kind of approach. And yes, you can go down the route of accelerator or investing or whatever it is, but I think they should do a better job in understanding what we really do and how they can maximize the value of interacting with us as Plug and Play.
So if I'm applying, for example, in the MENA region, I will be matched against Silicon Valley, Japan, any other area where the plug and play is functional and they are accepting applications. So is that what you are saying?
Correct. So it's not guaranteed, because it always depends on the needs of the corporate that we serve, right?
Right.
But if you fall under a specific use case and the criteria that our partners are looking for really matches what you are building and your stages of maturity,
right?
Then by being part of our proprietary database, you will be automatically sourced into a selection of startups that we push to our partners. And then the partner ultimately will decide, okay, I want to work with 1, 2, 3, 4, 5. And then, we put them in contact. That's something that, we do for our portfolio companies directly. So the companies that we invest in, for our accelerator alumni as well, when of course there is a fit, and also for all the other companies that we get in touch, maybe we pass on, and there is no, specific engagement now. But again, being part of our database, of our network, can guarantee you or can open, possibilities to you, whether it's fundraising, whether it's getting clients, whether it's being invited to our events and network and make network out of our network, which I think it's also a very valuable experience for a lot of founders. So Plug and Play, we can offer a lot of support to founders, early stage or late stage. It really depends, what kind of activation would they require from our side? And again, we have almost 70 offices globally. So you're a founder, you're trying to expand into a market, we can bridge you to the team over there, and they can support you. You would love to do, I don't know, specific engagements with our fintech team in the US, we can bridge you over there. They can do an assessment whether it's a fit or not, and they can put you in deal flow exercises, or they can directly, introduce you to banks or fintech players. So again, there are a lot that we can do. It's also a lot up to the founder to come forward with those kind of requests. Founders usually pitch. It's a yes. Will you bring me to IC? It's a no. Will you not bring me to IC? And then the conversation dies over there, which is a pity. But unfortunately, it is what it is, as I always say.
Yeah. How does plug and play help with the client acquisition?
Yes, that's basically we find. We define ourselves as a very strategic investor, right? Simply because of the positioning that we have in the market and in the ecosystem. We're not a normal fund. We're not a normal consulting company. We're literally the merger of the two, right? So the moment you become part of the Plug and Play family, you technically have access to all the network of partners that we have. Of course, always depending whether the partner is interested in talking with a specific solution or not. And so basically, we bring all our corporates and network corporates at the disposal and availability of the startups that we invest in. So the matching between the two, it's pretty, I would say, pretty clear. On top of the one-on-one portfolio kind of support that we give. For example, my portfolio, I like to work with to be very hands-on with them, whether they need fundraising introduction, BD introduction. I always say every quarter send me a list of potential targets, and whether Plug and Play already has a connection to those targets or me have to go and look for the connection. That's usually how I personally would like to work, and I'm 100% sure my colleagues do the same.
Once I have been selected by Plug and Play Accelerator, what are the next steps for me?
It's pretty straightforward in that case. If you get selected for a program, you pass through our interview phases, our selection. Our partners as well usually have a say in our selection, so you'll be scrutinized also by our partners. If you match all the, if you tick all the boxes and you're ready to go, you get into the program. You usually enjoy. Hopefully you enjoy a 3-month kind of exercise working alongside our client, working alongside our team as well, and getting the benefit of the entire engagement, which usually not only entails sessions, mentorship, the kind of, I would say accelerator layout, but, external BD support from the team, external fundraising support from our team as well. And the moment you graduate is the moment where you get, technically officially onboarded into our, proprietary database, and hence where all these activation points with different offices, different partners across the world start to happen. I love our accelerator programs simply because I can work very closely with the founders. I can see how they behave under stress. I can see how they progress in a very short period of time, which might be or might not be a relevant metrics, but I still account for that. Spending a lot of time with the founders, see how their team works, how they treat their teams, and so on, helps me also a lot in my due diligence process. And hence it's a bit easier for me then to decide, okay, I want to move forward with the founder, bring it to IC and get final approval. I've been working with the founder for 3 months. I know how he's addressing his business, how he's addressing his team, the kind of person that he is, and so on. So it's, especially at early stage, it's a good exercise to test the water a little bit, and also try to de-risk a little bit the investment opportunity as much as you can.
What do you measure in due diligence most of the time?
It really depends by case, industry by industry, and stages of maturity. Again, Plug and Play, we tend to come in relatively early, so pre-seed and seed. I think, what, generally speaking, early stage, you would want to look at the team. If there is a founder market or founder problem fit. For example, if you're building in fintech and you've never worked in payment, you've never worked in crypto, you've never worked in banking or any or finance related jobs, I'm wondering, why are you even building in fintech, right? So that's, I would say, sort of like a high level screening. You look, of course, at the market opportunity. You look, of course, if there has been, which for us is very important, and we do it implicitly to a certain extent if there has been any validation from the market. So is it just like a cool idea and a cool product, or is actually someone buying it? And we can help figuring out who can buying it, again, leveraging our network of corporates. So we usually tend to, I wouldn't say directly involve our corporates in the due diligence process, but we get some feedback. We understand if they are looking at the same direction of the company, if they're scouting for a similar solution, if they're asking us to execute deal flows for those specific vertical solution or problems. And that's a good indicator for us that, the founder is building in a domain that, private sector, Fortune 500, Fortune 100, whatever it is, are actually, currently investigating and spending a lot of money into, which is of course a good sign of market validation as well. So I would say without, getting into the technicalities of, the product DD, the tech DD, whatever it is, the team of course has to be stellar. We like amazing profiles. I love delusional founders that think they can, completely change their vertical and change the world. We talked about, of course, the market opportunity. There are specific, I wouldn't say specific metrics that a VC would need to look at, but of course, if the market size is, I don't know, like a $2 million market size globally, it might not be a VC case for me because I will never be able to generate any return, decent return out of that opportunity. So there are some, market size and market growth and market trends implication that we need to account for. And yeah, I would say high level, that's what we're looking at.
Interesting. How do you measure the market size? Because you would have some statistics already from your past experiences with different startups. So, but usually, what do you take into account? Because every founder, most of the time, they're mentioning $5 billion, $20 billion, $30 billion market if we take top-down approach.
Correct.
This is what most of the time they're going. They could be wrong. How do you analyze it?
That's part of the due diligence process, right? So
Right.
I think the conversation with a founder, especially if you decide to move them into a due diligence process, has to be a very open conversation, right? You should be able to challenge whatever the founder is saying, because ultimately, right, a founder is just presenting you a pitch deck, a couple of numbers pasted on it. What's the guarantee that those numbers are true or not? So you should be able to challenge, or if we don't want to use the word challenge, which maybe has a strong meaning behind, but you should be able to have a conversation around the numbers that the founder is presenting, and same way the founder should be also able to inquire you as a VC whether you're doing a good job and support yada yada yada. So I think in terms of the market size, founders and investors should really have an open conversation. They should see where are the sources coming from? Have you tried to do different approaches? Do I have, any kind of knowledge that I can bring on top? Can we do the recalculation of the market size together? So I think, again, everything that a founder puts on a pitch deck leaves room for a very open conversation between the parties in seeing whether we are aligned on a specific, and again, it's not really a specific number, right? But it's just the thought process and the idea behind analyzing an opportunity that I want to understand. I want to see what have you been thinking. I want to see what have you been evaluating in that market size exercise so that I can eventually support, we can eventually realign, or maybe, you've done an amazing job and that's actually the picture that we're looking at. And, it's amazing. You're saving me a lot of time. But usually, founders, not that I have anything against founders. I love founders, but they try to get, shortcuts in terms of specific elements that they don't think is particularly important. So GPT, couple of data points, the classic bubble graph, one into another, times sum, and they place it over there. And then when you challenge them, okay, where you got those numbers from? They don't know. Have you done different calculation? I don't know. So again, it's a complicated exercise that requires a lot of patience. And again, it's again, speaking with a founder, regardless of market size, I take it as a very educational journey for both parties, right? You need to learn something about the business. I need to learn something about you. You need to learn something from me as well. And eventually in the conversation, in the brainstorming, given my expertise, your expertise, we can combine and figure out something about your business that maybe you haven't thought of, I haven't thought of, we figure it out together.
What percentage of your accelerator cohort has built something real that you're very proud of today?
I would love to think, technically everyone is building something real, right? It's not up to me to say whether it's real or not real. It's also like a bit of a weird terminology to use, right? Ultimately, it's the market that, it's the ultimate judge, right? If someone is buying it, if someone is using it, if someone is adopting it, if someone is asking for it, then the idea makes absolutely total sense to exist, absolutely total sense to be invested in. If ultimately, no one in the market is really requesting it or buying it or paying for it or whatever, then it remains a good idea, but maybe it's not the best for the market. So ultimately, the market is the ultimate judge on that. But we have seen a lot of interesting use cases. I mean, I have company in my portfolio, digital hotelier, for example. I mean, I'm just mentioning one, but I have many incredible use cases in the travel and hospitality industry. I think within the past 2 years, they've opened up in Southeast Asia, they've opened up in South Korea, they've opened up in the US as well. Incredible use case, incredible adoption, super sticky product. So we do have a lot of interesting use cases. Do all of the companies that graduate from our programs end up becoming unicorns? Of course not. I would love that, right? I would be the next, I don't know, Y Combinator #1 VC in the world, right? But we do see a lot of adoption, and in the program itself, it's something that we try to work a lot on with the founders, is really figuring out this aspect. Like, you come into a program, pre-seed companies, you have an idea of what you're building, you have an idea of a specific problem solution that you're trying to, solve on one side and figure out building on the other side. With our expertise, with our hands-on approach, with the partners that we work with as well, we can, help you figure out whether you're on the right path or whether you're completely far away. Because sometimes, people think that, they're building on something for a specific problem. And then the entity that is supposedly having the specific problem is looking at a completely different direction. But if you don't have that connection between startup, corporate, startup, government, startup, ultimate end user, then you're always going to be in the limbo of maybe I'm building something or not. We as Plug and Play try to bridge the two and try to figure out, as you said, are you building something that is actually relevant for the market, someone is going to buy into it, or you're just building something that you think is relevant, but the market is completely disconnected from it. So I think that's another, I would say, value add of the Accelerator program, because if you are in that phase where you're still figuring out your ICP, you're still figuring out your go-to-market, you're still figuring out, how are you even going to market your product, we can really support on that.
Pre-revenue, pre-traction. Am I too early for Plug and Play?
Depends what you expect from Plug and Play, right? We come back to what we were telling before. Depends how you approach Plug and Play. For an investment opportunity, again, really depends, right? If you're talking about deep tech, I wouldn't expect you to have any revenue, but if the team is relevant, what you're building is okay, of course, having a look at that, it's sort of like implied. If you're a stellar founder, you've exited before, or a unicorn founder building something new, maybe I wouldn't even need you to get revenue, but I will just, write a check on, the founder profile itself. So again, a lot of conversation around it, a lot of consideration, generally speaking. For an investment opportunity, pre-revenue, pre-seed, it's okay. Pre-revenue, we would want to see some market validation. So maybe it might be a little bit early to give you a yes or no directly, but we can build up the relationship, see how you evolve over time. And then when we're going to see some market validation, then, come with a final decision of, look, I think it's the right time for us to have a proper deep dive, or like, no, we still, don't think it's an interesting case for us. And, we cut the conversation. So investment side depends. Program side, absolutely not. We do have accelerator programs that, our corporate partners or our government partners are very happy to look at very early stages, so almost an incubation kind of level, so 100%. If it's for deal flow with corporates and working directly with, the Visa or, the other partners that we have, really depends on the kind of risk appetite that these companies have. If they're happy to look into very high risk solutions, so usually in the early stage, right, where, integration might be complicated, the product might not be there yet, there is still a lot to figure out, then it's a good fit. If the client of ours or of our partners are looking for a completely different, mature solution, then it might not be a fit. But again, if you don't ask us, and if you don't know what we're doing in the full spectrum of our services, you will never know. So I would say, regardless, pre-seed, MVP stage, whatever, just approach us. don't limit yourself to pitch about, hey, I want money, invest in me, but just try to figure out what we do, how you can engage with us on a longer term, what kind of value can we provide for you on that specific point in time, and how we can build up the relationship for then, try to activate all our channels and all our initiatives for you to benefit from.
How can they approach you other than applying for Accelerator program?
So you can apply on our website, you can apply on Accelerator programs. Our LinkedIn pages are very active. We're always posting about initiatives and engagements and exercises that we're running with different partners. You can get in touch. I mean, me personally on LinkedIn, I'm pretty much very responsive. Now I'm 100% sure people that are going to look and watch the podcast that I haven't replied to are going to go crazy about it. But I try to respond to all my LinkedIn messages at least twice a week. So I think, plenty of we're pretty cool people at Plug and Play. We're very easygoing. You can reach us out. Don't text us, of course, or don't text me particularly after a specific time in the day. Yeah,
Don't make me that.
Look, after 11 p.m. I think it's personal time. So from 7 in the morning until 11 p.m. I'm available. After that, please don't. But
Don't disturb me.
Don't disturb me. I need some time for myself. But apart from that, always reachable. Always happy to speak and to help and see if there is something concrete that we can do.
What do you expect in the data room of seed stage company or startup?
Yeah. So. What I usually recommend founders, or when I work with founders, for example, in our program, but even with my portfolio when they're opening up new rounds and whatsoever, I think the investor experience in the data room has to be the smoothest possible. You don't want to have an investor emailing you every 2 seconds. Where can I find this? Where can I find that? Or the document is not, I cannot view it. Can you give me access? Yada, 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 right? So you need to figure out exactly what to put in and how the entire experience for me as an investor can be as smooth as possible. I would expect you on a very high level to find a pitch deck, maybe different version, a short version, a normal version, an extended version. I would expect to find all the legal documents so my legal team can do the legal part of the DD, so articles of association, founders agreement, CR, any previous say from previous rounds, everything about your fundraising history. I would expect you to put there market research and market documents. So if you've put a specific time sum or a specific market size, as we discussed before, I would expect you to have the backup of that and how you've done the calculation, the research in the data room as well. So me personally, I want to spend as much time as I can on the data room itself without bothering you for extra documents. Where do I find this? Where do I find that? So everything that has to do with, even financials, early stage financials, me personally, I don't necessarily care. I'm not going to base my investment decision on a projected P&L. I've done banking. Most likely I can build a model better than you, right? So I'm not going to question you on that. But I still want to see you put in the effort, the exercise of how you see the company evolving. How do you see the revenue to be projected in 1 or 2 years? Just purely as an exercise, because I want to see where does your mind stand in terms of your company growing and the milestones you want to achieve. And then, of course, we can work on it together. So everything has to do with financials, how much money are you spending, how not only the full amount, but the breakdown of your expenditures. I think that's interesting to look at. Anything related to the product demo. I love to see videos when, a founder is pitching without giving me an overview of the product. I'm like, yeah, fine, but what are you trying to sell me, right? So good 2 minutes video, 3 minutes video, guide me through how the entire customer journey works. It's amazing. Legal documents, we said it. Market documents, we said it. If you have anything related to PR and marketing, you've won some award, cool stuff you put over there. It will cost you 2 seconds to do it. So I think, again, baseline for the founders, watching at the podcast and listening to us that are trying to get, some info is try to make the investor experience as smooth as possible.
Don't let them solve a puzzle for you.
100%.
You have to solve a puzzle for them.
100%. Make it, I always suggest make it dummy proof. Put everything over there, put a directory so people can see where to go, what to look at, very easy to understand, and so on. And eventually, one of the most important documents that I think, not important in terms of relevance, but again, making my life easy, is always having a FAQ document. Can be a PDF, Word document, whatever. Why? Because ultimately you're going to speak with lots of investors. We're all going to ask the same questions over and over and over and over again. You can just simply keep track of those. put them into specific documents, and again, I'm gonna look at it. I find all the answers over there, and I'm just gonna come back with you. Like my conversation, what I like to do, and what I tell founders all the time is during the due diligence process, you want to maximize the time you spend, especially at the early stage, your time you spend with the VC, not on, but your financial don't look good. What's the projection? What's the hypothesis behind this growth or whatever? You want to spend time on the product, the vision of the company, and how are they going to go to market, like really tangible stuff. All the rest, the market research, the legal stuff, this and that can be in the data room. Put it over there, easy to read, easy to understand. So even people that, I don't know, haven't have much experience.
Is that
figuring
important for them to put in there?
Yeah, it has to be.
Okay.
It has to be.
So legal stuff.
Legal stuff has to be there.
Time and SOM.
Market research, market trends, any report about your industry that could help me have a better understanding. Again, coming back to what we were saying before, I always put myself as very ignorant in a specific domain, in a specific industry or whatever, market or whatever. So I need to have everything ready for me to do a proper deep dive, understand what I'm looking at, and have, again, the experience very smooth. I don't want to go and spend on Google Scholar or Google or ChatGPT or whatever to get all the information, right? You get my point? You can do it from your side. That's a part of your homework. If you do fundraising,
is video better for you, or pitch deck or some other stuff, or demo for product understanding?
I mean, a demo would be amazing.
Demo would be
Yeah,
amazing.
100%. Especially if it's post MVP, you don't have any market validation whatsoever. I think an easy demo of how a user would interact with your product, right? Or what does your platform do, or what does your product do, your agent does, whatever it is. I think it's very important to have. I need to have a tangible feel, especially at the very early stage, of what I'm buying into. I'm buying into the team 100%. That's what we are backing at the very early stage, right? Or majority of our conversation and our thought process goes behind the team if they're able to execute whatever. But I need to have a tangible feel of, okay, there is a product, I can see it, I see how it works, I see the UX UI, I see what are the implications at bottom that someone needs to touch. That's, I would say, pretty much implied. And the more you grow in maturity, so from pre-seed to seed to Series A whatsoever, the shape of the data room has to change as well. Like I would expect the more you grow, the more you start getting contracts. If it's a B2B, of course, kind of solution, I was an auditor myself before. I was doing financial service consulting in audit and advisory. I want to review if you're telling me that you have a contract with, I don't know, PepsiCo, right? And you put the PepsiCo logo on your traction slide in the pitch deck. I want to see the contract sign. I want to have reassurance of those documents as well to be in the data room. Of course, there can be instances where that is not possible, but again, right, I need to verify. I need to do my understanding, my diligence across the board.
So, Andrea, what is your typical check size and ownership expectations?
Yeah.
From them?
So typical check size really depends. As Plug and Play, we currently have 11 different vehicles that we invest from, right? Some of them are vertical specific, some of them are geography specific, and on top of those vehicles, we also have a family office. So usually the family office check goes in between $50,000 to $250,000. Again, we're not a lead investor for sure. We're usually like a follow-on investor, a strategic investor, so we get usually later in the
you wait for someone else to take the lead and then you come as
okay. That's also part of our diligence. Seeing we can build our own conviction, right? Because that's the most important thing, but seeing also if like a tier one is coming into the round, that gives us extra validation and the risking that okay, maybe it's really a bet that we should pursue very fast. So a ticket size is small from the family office. From the funds, again, it really depends. Can go from 500K to a couple of million. That's for initial ticket, and then follow-ons, of course, are a different topic as well.
How many meetings before a yes?
How many meetings before a yes? That's a good question. Really depends. If it's something that gives me the wow factor, or it's being already, again, comes to my network, there has been already some vetting and so on, and there is a little bit of urgency, I can try to do, most of the work directly, then try to loop in my partner immediately. The partner likes it, we go to our IC and get it approved. So it can be sometimes 2 meetings. Sometimes, again, it takes a lot of relationship building because maybe you're a little bit early, and hence, we meet once, and then a couple of months after we get your updates, we meet again, we build up the relationship, so on. So it really depends. Goes on a case-by-case basis.
What do you expect during this time in terms of updates, other stuff?
Look, I get literally flooded on newsletters from my portfolio, which I need to prioritize, and from just people that put me in the newsletter. So newsletter, it's always a good way of keeping people posted. Does it really work?
Do you even read that?
Again, my portfolio, for sure, I have to.
Because I'm assuming a lot of people would be sending you the newsletter.
Yes, too many.
And how are you keeping up with that?
I get flooded. I'm gonna be very brutal here. Portfolio, I have to.
Okay.
Because of intrinsic reasons of what I do. I need to keep up with what they're doing. Then if it's a cool founder that I have a good relationship with, if I like them, I keep up with them as well.
Okay.
If you don't really, or if it's a deal that I'm monitoring, then I'm happy to. Otherwise, maybe I'll just scroll through really quickly. So for me, if it's not a direct conviction, a direct yes immediately that I get excited, I'm like, I really want to do it. I think it's a good opportunity. The understanding that I have of the industry, it's already built. So I need to technically spend less time on the DD because whatever it is the reason, then it's a shorter process. If that's not the case, I would say, and I always recommend founders, again, we all as VCs, we get flooded with updates from people. We are very selective in who we read and who we don't read. So just, give us a phone call, not after 11 p.m. Send us a message, not after 11 p.m. I always pick up. Unless I'm on a call or whatever, I always pick up.
Should I announce your number over here?
Yeah, I mean, my number maybe not, but my email yes, my LinkedIn yes, I'm happy to. My personal number recently it's
you will not be able to sleep at night.
I will not be able to, and I need to keep it on for my family. It's a couple of hours in a different time zone, so I keep it on for that reason. I don't want to get panic attacks of people calling me. I'm just like, who is it? So I mean, we can do it. It's okay, but for people watching and listening, not after 11 p.m., not before 7 a.m. But yeah, so give investor a phone call, send the updates, is fine. Try to meet us for a coffee, bring us for lunch, bring us if you're drinking, bring us for drinks. If you're having a cool event organized for your startup, invite us over there. It's a good occasion for us to also get involved in the ecosystem around your company, and that also can help us bring and build a better conviction around a specific case. I think, generally speaking, and I think, what you're touching now can be very valuable. What we're touching now can be very valuable for founders, because usually founders they don't build, but they try to build a relationship with the VC in terms of, I need you now because I'm raising money. If I'm not raising money, or if you don't give me money, then I completely forget about you, which I think it's a wrong approach, wrong way of tackling fundraising. Regardless, you should always bring the relationship to a more human level, because again, I can help you in so many ways, but if you only approach me for money and the answer is no, then you basically miss on Andrea as a person, Andrea's personal network kind of help that I can bring to the table.
You can give them warm intros to so
I can 100%. But will I do it to someone who is only texting me because they're raising money and they want money? Most likely not. Will I do it for someone that maybe every once in a while is inviting me out, is checking up on me, sending me? It's a very simple thing, right? But they make you feel there is a human relationship between the founder and yourself, right? Because again, VCs, we're not, and I really want to say it, we're not ATM machines, or like living ATM machines for human beings. So treat us as such. If you don't care about building a relationship, 100%, because maybe I will never be able to help you or never be useful for you, 100%. I'm not expecting you to approach me that way. But if you're a little bit sharp and you do that, I think you can maximize the value of each interaction that you're going to have with me in ways that maybe you're not even aware of now.
What's the one thing founders never ask you and you're expecting them to ask you?
Help. They're always asking me for money. They never ask me for anything else. It's like how much are you deploying? Are you actively deploying now? Can you give me money? Yes, no. And if there is a no, then they disappear, most of them.
How can you help them other than warming?
So many ways, so many ways. Again, I'm an individual with my own personal network.
Yeah.
My personal network has a network.
Exactly.
So literally, if you don't introduce yourself, or if you don't base the conversation only on I'm raising, I need money, give me money, yes or no, but you open it up to, what plug and play can do for me. What can you do as an Andrea? Are you willing to do it now? Should we build a relationship before you activate your network, which is always the case, because again, network is very, fragile thing to leverage sometimes, and to exploit to a certain extent. So you cannot always do it. But again, founders, I understand that you're on a tight timeline. I understand that you're running out of money. I understand that there's a lot of stake. I get it. But again, do not limit yourself to pitch only for money. I can introduce you to my portfolio. They can become your customers and give you money, right? Contracts give you money. I can introduce you to the network of our mentors that can somehow become your advisor, do introduction, as well. So be a little bit more open. And again, I know now it's not a no forever. But if you take it and it's like, okay, updating the CRM, plug and play doesn't deploy in me, and you go to the next one, you'll never know.
What sectors are you hunting on right now?
I mean, I don't consider AI a sector anymore because, again, I think AI is basically embedded into everything that people are building. So we can mention AI, but we can also remove AI from the picture. Fintech, different sub-verticals, whether it's payment, whether it's remittance, whether it's even digital asset related to fintech. I think it's very interesting. Prop tech, we can go from construction tech, which I really like. It's a tough market, but I really like it. Property management as well. Data plays as well in prop tech, I think, are very interesting. I'm happy to look into industrial, especially AI on industrial applications. Robotics, I think it's going to be huge. What else am I looking at? I'm looking at travel tech and hospitality because of past investments that I've done that are doing very well. So if I could find similar solutions, I think not similar solutions, but solutions that are solving problem for that specific vertical, I'm happy to have a look. I think this is where my main focus is right now. But again, I'm happy for everyone to pitch. Again, we are sector agnostic for a specific reason. We like to look at everything. We try to make sense of everything. And again, our network of corporate partners can help us make sense of everything as well. So maybe for a normal VC wouldn't be a case, but for us, given that we have, 5 or 10 or 20 companies globally operating in a specific industry, can make a lot of sense because we know that they're looking for that kind of solution. We have that kind of input and we leverage that kind of insights to also target better our sourcing efforts.
Everyone talks about MENA deals.
Mm-hmm.
Where are the exits?
That's a good question. Where are the exits? I think
that is exit is on that side, but I'm talking about the startup exits.
Yeah, I think I think it's something that when you leave something on a day-by-day basis, you tend to lose the bigger picture, right? So we are so immersed in the ecosystem that we think it's like, so mature, but then when you take a step back, you see that, there are different pieces of the puzzle that are still missing. So it's still, for how much we like to say it's maturing and whatever, which it is, but it's still a very early stage ecosystem, right? Founders, they do not have access to, I call them exotic capital sources like debt, very few debt funds, credit, very few credit funds. Secondary market as well is almost, I wouldn't say non-existent because there are players, but it's like relatively small. So I think, again, we need to wait. We need to give the time to the ecosystem to develop to the point where specific, liquidation events will trigger. Whether it's going to be maybe government-driven, it's going to be, someone, pulling the trigger on with a specific policy or whatever, or regulation, whatever. We don't know. But again, the ecosystem is in the very early stages for how, regardless of how mature we think it is. And so, certain elements we would love to happen, right, in the current time, but it's still gonna make time before like mid-size company will be, like an appealing target maybe for like a US base or whatsoever. And again, it's going to take time, but I think, for how we are building, for how the ecosystem is developing, for how the region is able to attract, international capital as well, I do believe we're seeing some patterns that, sooner or later we're going to get there. And, more exits, more mid to small size PE deals will happen, more mid to small size acquisition will happen as well. So it's just a matter of, giving the time to the ecosystem to develop, maybe fail, maybe succeed, learn, go forward, and ultimately we're going to get to, a maturity level where different players, different pieces of the puzzle will always, will be there for, those, liquidation event to actually.
Should a founder be worrying about exit
Yeah,
in the beginning?
Yeah, no. I think very early stage, if you're spending and fighting with the VC about an exit path, especially here in the region when there are no exits, right? I think you're wasting your time. You might want to think, of course, to me, an exit scenario, if you're a pre-seed, right, considering that you're going to raise a pre-seed and then a year and a half from now, you're going to raise a seed maybe, or maybe like a little bit, in a shorter time frame, and then from seed you're going to go to maybe like a pre-A, and then pre-A to A, and then A to B, and so on. Maybe an exit is something that you will see maybe if you're lucky in 7-8 years from now, right? So what is the point today when you just built an MVP, you're getting initial market validation, you're figuring out your team, you're figuring out, how to build up your company, to actually think 8-9 years down the line what it's going to be. With how things are developing so fast from a tech perspective, from a market perspective, geopolitical perspective as well, it's almost impossible to predict, I'm going to be an acquisition target for company XYZ, right? So you can have an idea of, I'm building in a space that it's, usually subject to a lot of M&A. I'm building in a space that it's usually subject to whatever it is, whatever liquidation event we can look into, fair. But again, spending too much time on that at a very early stage, I don't think it's really the point. I think you're just losing focus, and I think it's a pointless conversation. I would love, to discuss it purely, to bring it up, brainstorm, see where your head stands in terms of that specific, moment in time, if it will ever happen. Because again, a lot of founders and a lot of people don't understand that. If you look at data, and again we can agree, disagree, and take 5% more, 5% less. A VC, 80% of their portfolio, 70%, 60%, whatever it is, will most likely fail and return $0. Right? 10 to 15% maybe will return 1x, 2x, 3x, whatever it is, which is still not sufficient to cover for the other 80% that they basically cause losses. And then maybe 5 or 10% are going to be those, 100x, 1000x fund return or whatever it is, right? So how can you literally know now that you're going to classify as, a 1x, 2x, 3x or whatever it is? Well, we don't care. We would love to see it happen.
But you do not demand any exit plan or anything like that at seed stage, or
how can I demand it? First of all, us as Plug and Play, not me, but us as Plug and Play, given the check size that we write, right, and the kind of ownership that we target, maybe 1, maybe 2% in that range, maybe 3% if we're really lucky in certain cases. We don't have the rights, not even the power, to tell someone you need to exit your business, right? We can eventually, since we work very close with our founders, recommend exit path or support in the exit path when that is already being initiated by the founder, or when we see specific trends in the industry, in the market, where we say, look, we feel and we see that the industry is going in one direction. We believe that maybe it makes sense for you to sell. And we've been having some conversations recently with a couple of founders that, we're building in a specific domain, and that domain is basically being, commoditized. And what you're gonna do? You'd rather until you'd rather take the time that you have to find a buyer, try to exit. You make good money as yourself as a founder. You return some money to investors, and then you go and build something else. But again, we don't force it. We don't have the power, the rights to enforce it. It's just conversation that we're happy to have. Just again, to see and give some insight to the founders, see where they, where their head is. But again, at a pre-seed and stage, I don't think that's where we as investors should be spending most of our time, and founders should also entertain those kind of conversation.
AI has changed the way we are coding today.
Mm-hmm.
Do I need a CTO if I'm launching my startup today? Do you demand for a CTO?
I'll get roasted now from the viewers in the comments. I mean, I would say yes. Vibe coding is amazing. It's something that simplifies the way you go about tech or building a tech product, right?
Yeah.
Is it sufficient enough to go out and sell and build a $1 billion company? I don't know. I would always expect to have someone technical in the team that understands what's happening. Maybe not directly with the code, because again the code is being written by AI, but at least it has a hands-on approach on what's happening with AI. Is able to eventually step in, do some extra kind of layers of control and so on. So I think even the figure of the CTO, as technology is changing, the figure of the CTO will eventually change as well. But I would expect always to have someone technical. You can call it a CTO, you can call it whatever you want, but there has to be someone technical in the team that understands how is the code being generated, can eventually step in and write code, can step in and eventually fix the code, because again, now there are software that can fix the code for you as well. But again, if you don't know what's happening behind the interface, what are you even building? You have a problem with a client, the product doesn't work anymore. What are you gonna say? Oh, the vibe coding. Let me call Claude and figure out
If they do have a fractional CTO or they have an agency helping them to build that.
I mean, agency, I wouldn't necessarily be interested in that case, because you're basically having someone else building the product for you. And then, I mean, agencies, I wouldn't, depends by the agreement, right? But I wouldn't necessarily.
A fractional CTO.
A fractional CTO can be okay, but again, how can you guarantee defensibility of what you're building if the CTO is not incentivized? Like a fractional CTO is someone that you put on a payroll, or you give them some scrappy equity. What's the incentive, right? And again, I'm happy. I mean, not necessarily I'm happy, but I can look into, and again, depending on the application, depending on the use cases, whatever. But I can understand someone building something fast, vibe coded, whatever, to just get an MVP, ship it to market, get the market validation, get the the user feedback, then to implement and build a proper product out of it. If you don't have the capabilities with the tech team to build a proper product out of it, I think even in terms of growth, you'll reach a cap that you will never be able to surpass. And then again, that's eventually not necessarily like a VC case for.
This is my last question, and then we're gonna conclude it. I closely follow Y Combinator, and they have a partner, Jared. They announced their policy, like how do they select startups in 2026. It was an interesting and easy to understand thing. Assuming you are producing some AI agents for the law, for the legal policies, understanding, anything like that. So they prefer someone who owns a law firm, and then they staff it with the AI agents working on different use cases.
Okay.
As compared to somebody who is just producing maybe 1 or 2 agents for the law firm. So they have gone to the agency model.
Okay.
Like you own an agency, you are bringing domain expertise, and then you are deploying agents on top of it. This is what they have announced recently.
Okay.
Compared to independent, any use case you are picking up and then you are working for that. How does this resonate with you?
It's a different approach, right? I mean, as Plug and Play, we look at things differently, because again, I think the Y Combinator model is different compared to the Plug and Play model in terms of acceleration, right? So we rely a lot on our partners' inputs for the sourcing, for the kind of solution they want, and so on. So we can, of course, bring our expertise on the table and tell them what should be done, but ultimately they have the ultimate decision making power in terms of we want 1, 2, 3, 4, 5, and then we as service provider have to basically comply with 1, 2, 3, 4, 5. So I think what they're looking for and how they're structuring their own sourcing criteria or their own let's say opportunity scouting criteria, it's a bit different and far compared to how we do it. Is it right or wrong? Again, it serves a different purpose, so it's not necessarily up to me, I would say.
In terms of defensibility of the product in the longer run, SaaS there were debates on LinkedIn, and I also contributed to that. Like SaaS has gone, and
That is dead. Everyone is
SaaS
saying
has failed.
that is dead.
CRMs are gone, no more, and which is already happening. I'm using Claude. I have created my co-work with the Claude. I have automated 90% of the tasks. It can play on top of my CRM. All of my data pools, I do not need anything on top of. Like I
Mhm.
do not need a CRM, I do not need ERP. It can run everything for me. It can create tables for me. It can do pretty smooth work for me. So from that perspective,
Mhm.
defensibility has been a question mark.
Correct.
That's why this question came up. Like, how do you see defensibility of the products that you are curating or performing due diligence on?
Very complicated. And again, very complicated, especially nowadays. Why? Because as we said, the barrier of building tech has become down.
Mm.
And literally, whatever you're building can be replicated by a guy spending a couple of weekends on Lovable and vibe coding, similar version of the product, right? So investing early stage has become even more complex because of the fact that now everyone has access to tech. Doesn't require, maybe as it was before back in the days, like a proper full technical team to build something. Now, like literally a guy out of uni can vibe code something, can go and sell it and, make money and, build a product out of it. So how we evaluate opportunities as well as VCs should change a little bit. I think, defensibility is something that you can build also in very different ways, right? If you get, for example, privilege access to GTM channels, that's also defensibility as well, right? That adds a layer of defensibility, right? If you're if you're a fintech and you're plugged into every single bank, and no one else has that kind of distribution channel, that's a defensibility as well, right? So I think defensibility, you can also build it on the long run. The more you grow the company, the more you build on top of the initial MVP, the more you expand and position yourself in the market. That's also gives you a defensibility angle. At a very early stage, it's extremely complex. That's why I believe that everyone who is investing in early stage nowadays is having a really tough time, simply because, again, right, who is guaranteeing me that whatever you're building cannot be replicated in 2 days and you're completely out of the market? Or who is guaranteeing me that the Claude, the OpenAI, the Perplexity, the whatever will add a specific feature that will erase you completely from the market tomorrow? So it's a very complicated, but that's also why it's so interesting, right? And again, I think everyone is going to have, or is having, a very tough time early stage to sort of like figure out all these moving parts of the puzzle, because moving parts of the puzzle, because again, the industry is moving so fast and changes are happening. Before maybe it was on a yearly basis. Now it's every 6 months, and tomorrow it's going to be every 3 months, and the day after tomorrow is going to be every single month. New features, new updates, models getting better, and so on. Capabilities of these models, increasing and tackling different verticals, different industries, and whatsoever. Then it's really going to be a big question mark on, does it even make sense investing in the space anymore? Where, as you said, right, I can plug in Claude, update a couple of skills on Claude, and have it basically run, a CRM or a GTM engine basically by itself. So interesting times.
Thanks, Andrea. Thanks for your time. And we'll sit with you another time. It was a really good talk.
Likewise, I super enjoyed it.
We should launch podcast season 2 on this. And
100%.
happy talking to you, man.
Likewise, it was a pleasure.
Cheers.
Thank you very much.